Bitcoin back in the headlines, the digital currency finding its mojo again, gaining almost a third of its value within the last few weeks. Is it the real deal? Well, joining us for more, live from Perth, is Digitalx portfolio manager Matt Harry. Matt, pleasure to have you on the program. Just give us an idea of why we've seen Bitcoin surge in these times of volatility.
Well, you're right, Ingrid. We have seen a very strong surge of late, and Bitcoin's certainly getting its mojo back. There's a couple of things to consider here. One is the technical situation. So we've just broken our record of longest consecutive days trading above 10,000 US dollars. The previous record was in 2017 during the blow off top. I think it was approximately 62 or 63 days. We've just clocked over 102 days. So seen a lot of bot and algo buy programs switch back on. A lot of traders come back into the market. We've certainly seemed to have a very strong technical level underpinning Bitcoin now at 10,000 US, and we recently traded as high as close to 16,000 US. So that's the technical side. There is also a very strong fundamental picture happening at the moment. So there's been a whole raft of news releases, I guess you'd say, from a fundamental perspective that have really underpinned demand. You're probably familiar with the PayPal announcement, which was last week. So PayPal have announced that they will be enabling digital currency purchase and consumption through their 26 million merchants as early as next year. So they'll switch on functionality for the four largest digital assets, so you'll be able to buy them and use them to pay merchants on that platform. They've got 346 million users, so it's pretty strong news. And certainly the noises that we've heard since are that the waiting list for that functionality is about 3 times larger than PayPal had initially expected. So very, very strong demand coming in there. We've also seen a whole raft of other news, even as positive things like Iran sovereign purchases of Bitcoin to facilitate international trade. That's given that Bitcoin's a limited supply asset, you start to see sovereign wealth purchases, and it becomes a giant game of musical chairs. And it's a game that we're very happy to have already reserved our seat at.
Matt, there's always been speculation that Bitcoin could, eventually be seen as an alternative to gold. Is there any justification for that, do you think?
Well, certainly we believe there's a lot of justification for it. If you look at the properties that make Bitcoin a good long-term store of value, in our eyes, Bitcoin is superior to gold on almost all of those store of value utility parameters. So it's far more portable. It can be sent over the internet. Gold's very expensive and heavy to carry around. It is far more divisible. So Bitcoin can be divided up to 100 million places, or Satoshis as they're called. It is entirely verifiable. So in order to verify the legitimacy of a Bitcoin, you simply need to query the Bitcoin blockchain. Gold itself can actually be counterfeited. There was a $4.2 billion US dollar counterfeiting scandal earlier this year out of China. Bitcoin cannot be counterfeited. And on the measure of scarcity, we would say that gold is scarce, but Bitcoin is actually finite, given its hard-capped total supply. So on many of those store of value utility parameters, Bitcoin is far better. And given that it's currently trading at 2% of the market cap of gold, so Bitcoin's around 200 billion market cap. Gold's currently around 10 trillion US dollar market cap. We see potential for a lot of topside over the coming years, and certainly we're not alone in that opinion. JP Morgan came out recently and said that they believe over time Bitcoin could challenge gold in terms of market cap and in terms of being a preferred store of value asset. So a glowing endorsement there, and certainly that's the narrative that we're really seeing taking hold across the institutional space.
All right, so looking at the flip side, can you just talk me through some of the downside risks for Bitcoin? What do you look for to see downside, or that may be a risk?
Well, look, as far as I can tell, the largest risk really is market risk. So there is a lot of volatility. In fact, it's an incredibly difficult asset to trade unless you're very well resourced and an extremely good trader. There are a lot of large holders that can still push the market around, although liquidity is improving. So there is some risk if you're going to trade, but from a buy and hold perspective, it is a very strong performing asset, certainly the best performing asset that we know of across the globe. In fact, if you had have bought and held in 2012 through to 2020, based on a financial year lows basis alone, you'd be compounding annually at 143%. Whereas if you had have missed the top 10 trading days annually over the same period, you would be down 44%. So from a long-term buy and hold perspective, it's a very, very strong asset to hold.
And Matt, there's thought that the banks should be exposed to Bitcoin going forward. What are your thoughts on that? And I guess the way that regulators would approach that as well as shareholders?
Yeah, look, I think there's room for holding Bitcoin on balance sheet for any public company, and certainly we've seen several public companies in the last 6 weeks come out and say that they have purchased Bitcoin to hold on balance sheet as part of their treasury strategy and as a hedge against inflation, given the current macro tailwinds of super easy monetary policy and overextended asset values, potentially leading to a traditional asset price bubble in coming years. Certainly the defensive portion of portfolios with negative real interest rates around the world, prospects look pretty grim. So our research has shown that holding a small portion of Bitcoin in a more traditional portfolio, up to 5% of portfolio weighting, provides a very strong risk-adjusted improvement to returns over 1, 3 and 5 years. So the regulatory side of things, the regulators have been broadly supportive. They've been pretty clear in Australia that they're supporting the industry, and certainly they've been clear in how different digital assets are classified and treated under the law. It's not true that the market is unregulated. It is under-regulated, I would say, at this stage. There's not a lot of specific regulation, but there has been guidance from regulators around the world as to how different types of assets are classified, how they're treated under law, and what the resulting compliance considerations are as well. So broadly supportive, and even in the US, they've been incredibly supportive. They have stated, the SEC has stated that they are looking to drive this market forward and support the market rather than over-regulate it as such.
All right, Matt, we'll leave it there with you. Appreciate your time. Thank you so much for joining us here on Ausbiz.
Thanks, Ingrid.